Hello everybody, and welcome to the second video in our new Learning How to Technical Analysis series. Now, this is a new concept, but one that I thought would be very helpful, more than the usual reading off charts and doing TA for all of you amazing traders out there watching these videos. So, the last time we talked about the Fibonacci retracement, finding retracement points, bounce points, whatever you would like to call it. Now we are talking about the target, setting a sell target. Now that we know how to find a retracement, and if you haven't already, you can go back and watch that video. I'll leave a card right above, and then you can come back here so you know the full setup. Right, so from the last video, we have found our retracement point. Now we want to know where to sell or what to look for in terms of a target. So we have the engine coin or engine token chart up here, and we are going to give a basic demonstration of the trend-based Fibonacci extension. So we know from the first video that a Fibonacci retracement requires 2 points. It requires the beginning of an impulse, whether that be an impulse up or an impulse down, and it requires the end of the impulse, or where we rejected or where we found support. Okay, so we know that point A and point B are used for the Fibonacci retracement. The Fibonacci extension uses both of these same points, but it requires point C, or point number 3. Point number 3 is going to be where we actually found retracement. So what I'm going to do is I'm going to back this up to make it look like we are right here. We have found our point of retracement, and we do not yet know what is going to happen. So I'm going to grab this trend-based Fib extension. I'm going to grab point A. I'm going to grab point B. And this is where point C comes in. Point C is going to be where we retraced to. So it's going to be that bottom of that extension. Now what we can do is we can look and we can say, okay, probability, or Fibonacci says we are going to retrace to one of these points, being 23%, 38.2%, 50%, 61.8, 78.6, and at the very top, which is kind of cut off, is the 100%. So we know now at one of these points is when we want to re-evaluate market conditions. That means when we reach one of these points, we are looking for possible rejection, so we want to sell. Right? We are looking at our Wilder's index. Are we overbought? Are we oversold? Are we trending above 50, below 50? We're looking at our stochastic. Are we at the top of the playing field? Are we at the bottom? Are we in the middle? Do we have room to move up, or do we have more room to move down? We're looking at our moving average convergence divergence. Okay, we're saying, is our 8 EMA above or below our 21 EMA? Now we're going to do many videos on all of these indicators, and many of these terms may be foreign to you, so definitely hit the subscribe button, as I am extremely grateful to each and every one of you that does that. It helps the channel out immensely and keeps my motivation up to put out this free content, so thank you so much to all of you. Now what we're going to do is we're going to take these lines here and we're going to say, okay, so we have our plotted lines. Do we hit one of these targets? Does the Fibonacci extension prove true? And we see right here it does. On our next pump up, we reach exactly, just about exactly, this 61.8% retracement right here. Okay, well you say, yeah, you got lucky once, but let's go ahead and try that again. So I'm going to remove the drawings here, and we're going to do this all over again using this next impulse, this next rejection. So point A, point B. We're going to take it, point A, point B, and then where we came back down to, which is right up here, okay? And then we can see, yet again, Fibonacci extension proves true. At 100% retracement to the upside, we find a rejection, and we move back down. Now, using this in confluence or with the Fibonacci retracement, you will then have a better idea. Granted, no trading strategy is 100%. If anybody tells you they have a 100% success rate with any trading strategy, they are lying to you, and I guarantee that. But all of these indicators and all of these technicals will help you get a better estimate, right? An educated guess, if you will, as to what is a safe buy zone and what is a smart sell zone, because the name of the game is forever maximize potential and minimize risk, right? We're not maximizing profit, right? We're not sitting here waiting for it to go higher. It drops, we're waiting for it to pick back up. It drops more, we're waiting for it to pick back up. We're maximizing our potential. They are very, very different things. So the Fibonacci retracement is going to show you where a comfortable buying zone could be with a confluence of other indicators like your momentum indicators. And the trend-based Fibonacci extension in confluence with your other indicators and pattern recognition is going to show you good sell points. Again, I can put this one on the first impulse as well, so you can see we find this first retracement, right? First extension, second retracement, second extension. Granted, like I said, nothing is 100%, but with a good grasp around momentum indicators, basic momentum indicators like RSI, stochastic, and MACD, general pattern recognition knowledge, and some useful things like Fibonacci, you can become a far more successful trader than you were, and it doesn't even take that much time. Okay, so if there is an indicator or a strategy or a pattern recognition that you would like me to go over, or like always, if there is a chart, a ticker symbol, whether that be Forex pairs, whether that be futures, bonds, stocks, crypto, definitely leave the symbol or the pair down in the comments below. Hit the thumbs up, hit the subscribe. Even if you don't, I will still happily read your chart for you. Okay, and remember, I am not a professional trader. Nothing should be taken as an entry or exit or certainty of a price. Never enter or exit any position based on what you hear, see, taste, or smell on social media. Granted, half the time, someone is going to try and sell you something at the end of their rambling. So never listen to anybody on social media. Obtain the skills and the knowledge for yourself to become a successful trader. And that's what I want. Granted, it's kind of self-defeating if my goal is to teach you how not to watch my videos, but here we are. So I will catch you guys on the next video. Much love. Remember, no FOMO, no panic selling. Always have at least 2 justifications as to why you decide to enter or exit any position.